learning technical analysis. And you cannot complete learning technical analysis without understanding support and resistance levels when charting. So that's what we're gonna start with our TradingView platform over here, looking at the stock NVIDIA. Remember, support levels are historical price levels where buyers step in to buy the stock. Therefore, you'll see the stock bounce off the same price multiple times in the past because there are buyers around those areas to support that stock when it's sold off to those levels. So for a stock like NVIDIA, on the chart you can see a clear support around 210s over here. That area, it's bounced off once, twice, multiple times before. And also another clear level over here when the stock has sold off to around 170s over here and bounced off over here once, twice, 3 times in the past, another time here and here over the course of the last 12 months. On the other hand, resistance levels are historical price areas when sellers step in to sell the stock. So whenever you can see the stock run into those similar areas again, buyers decreased and sellers decided to take profits or just get out of their position. So a good example here is, once again, on NVIDIA, you can see that over here, right, the stock peaked out around the 229s area. If you line that up back to historical price levels, you can see some similar selling pressure and resistance back here in almost a year ago, over here again as well. And same area, you can see the stock had bounced before off of our 170 support before, but then when it reached around this area, 194, that's when it sold off around the 195, 194s area, and it reached that same resistance once again a couple of months later, and the stock sold off. Here are 3 quick tips for you when drawing support and resistance and basic technical analysis. Find the extreme highs and lows, V-shapes and W-shapes on the chart. So you want to find the most obvious points you're looking at. So in this case, right, the previous resistance that we drew, this is an obvious point of resistance over here when it peaked out and sold off. So over here, so this is another V shape on the support area here. You can see the stock form a V shape on the sell off and bounce. So this area is also another significant support. Over here, once again, you have another V-shaped recovery here. So another area of support down here around 115. And over here, when it forms an upside down V shape, when it peaked and sold off, that's another resistance. Tip number 2, you want to look for areas where the stock had contact points of at least 2 or 3 more times in the past before. The more the merrier. So that's the reason you can see on our charts, all the levels that we've drawn, it's touched the stock at least 3 times. Once over here on this level, 194, once, twice, 3, 4 times. Same as resistance, once, twice, 3 times. Support over here, 140s, once, again, over here. Tip number 3 is to zoom out to the daily chart or the weekly chart. There's just too many traders who are just focusing on the short-term time frame during intraday trading. You want to be looking at the bigger picture. That's the reason we're looking at the daily chart. And if you're swing trading, you want to be switching over here to the weekly chart. That's what you should look at if you're swing trading. If you actually made it this far into the video, let me know down in the comment section below, and remember to drop a like on the video if you find it very useful. Drawing support and resistance is by no means the only technical analysis topic to study. There's also price action, trend lines, and so much more. If you want to learn more about it later on, I have many more videos going in depth about this topic, so make sure to check out the videos listed down below. You can continue to learn by watching the full video here. And if you enjoy these quick and easy trading lessons, there are many step-by-step trading courses and strategies that you can learn for free. Click this playlist right here.